Hello and welcome. It is that of Friday, the 4th day of October 2019. It's in that of 12:45 p.m. Eastern. My name is Derek. All bets trades of the like within each his own risk and their own reward. All right then. Silver, gold, and the ratio. I haven't even looked at gold and the ratio today, but I pretty much know it's just what same old, same old. However, what do I see in here? And when I do these charts, it's mainly about just really showing ideas how I do this type of stuff, and yeah, that's really about it. It's seeing here that we've been below the save 1740 fib line, which connects this low towards this high, and this is the 38.2% down correction. By going below it like it did, that's telling me that okay, so you want to go to 1613. That's the statement that it's making. The 18 average is declining, and it's still got to break below it. When you see it in the low 17s, if it gets there, that's going to say okay. It's looking as if it's going to break below this low and eventually, concisely reach a price move, probably piercing below 1613. What we do after that, well, we'll do what Fibonacci usually does, but it can be multiple things. And when we see this within the last 2 days, okay, so the price actions had this rally up. Could it be a failed move? Well, the 18 average at least has to flatten out, which is what it did in here, but that broke out to a failed breakout. I started with the 8-hour chart. I'll go back to it again because it'll show it a little bit better there. But obviously, doing that is the first step. And when you have a break above it, then usually things will be good. But this was what I guess failed break. That's why there's successful breaks and failed ones. This is what one of the failed ones had with a really modest failed fast move to the downside. And when I say fast move, that just means a concise lower low, which is this low to this low. But nothing too big, hence thus being modest. And a decent gain, of course, would be that to 1613. And viewing it on the 8-hour term, which means basically the 1/3 day, because this practically trades close to um, every hour of the day, with the exception of like 1 hour, like 5 to 6 p.m. Anyway, 1740, which was originally hit here, had a very good rally getting to 2 Fibonacci points, resisting this area here, not supporting this the second time around because it supported here, didn't support it here. It did support this, but I mean, support uh, means that, well, you stopped going down, well, for 3 periods, and it didn't really go up. And then it had that, what could be that failed breakdown. So it's either we're looking at the failure in here, and then probably a decent move up, or you make your low, you resist where you came from within the 18. Usually nothing wrong with piercing above, which is what it's done. Where we came from, yes, we have. Well, 18 average is pretty much around 17 low change. So yeah, if you see it around the low 17s, that is very that's very weak, and most likely we'd be looking for a new leg lower. But getting above this, well, that would most likely mean, unless of course it's a failure, that things would be looking pretty good. Now, of course, there's multiple time frames to look at, and I'm going to switch this because I want to use the drawing tool, and I want to keep these Fibonacci lines in place. And well, I'll just remove the drawings really fast, and that would remove these lines as well. And I inserted earlier Fibonacci lines earlier in the day, which represented it from this high and this low. I was just fooling around, and well, let's take a look at what's going on in the 15, because it was really volatile. And I'm like, and I forgot all about it. It's been like for a few hours, and I'm like, man, I forgot all about silver. I don't know what went on, but this thing got really wild the rest of the day, and I'm kind of glad that I forgot about it because it's the story's continuing, but the volatility has most certainly reduced. Now the Fibonacci lines in here represent again this high to this low, so it really started up from in here on. So it comes down to Fib, bounces, but nothing for great. And this next rally was not as strong as the next, and then you have this wild period here. So I don't know what happened at 8:30, what news came on. The volatility isn't anything enormous though. When you look at the low at 17 like 28, a high at like 1769, it's what, 40 something cents, like a little over 2%. So it's not like it's a monstrous extreme move, but it's still pretty big. Okay, I'm going to look at this. I got to go to the 1 minute time frame because this is just too wild. And take a look at what happened. I don't know if I can't remember if I went to the one or I probably did back then. I can't remember though. And that back then is like 9 o'clock. Anyway, so we come up to be interestingly we resist this Fibonacci in here for a bit, and after this little level here, we've been found resistance here at this level where it's supposed to 18 average, nice little turnaround stuff. But getting above on this would, I mean, it's just one of those wacky moves when you go up and down. It's you get into those indecisive moments where it's like in a big bear bull kind of battle situation. You have this big volume that comes on in. So 1 minute term time frame. What happened at 8:30? Okay, I'm trying to scroll back as far as like this so I can. So before the event, this is what the market looked like. All this type of stuff. Anticipation 8:28 period. So some sort of news came out at 8:30, and it originally got people to got the buying in. And when I had your first move in here, you come to the 18 of closes, and obviously that first move the sellers came right back in and gave it a good whacking. It basically is another way of putting it. But as it came down to the 18 in here we can see as far as reversal of trend, if we're looking at short-term day trading type of stuff, the bullish signals was around 1740. The highest I ended up getting to after that, well, obviously it made the pattern of higher highs and higher lows to this point. With this interesting failed breakdown, this is similar to like 2008, 9 kind of moves where just a lot goes down and then back up. But failed move, fast move, because technically speaking, I would expect when you look back at just this in here. Okay, what does this mean in here? Oh, well, not the biggest of failed moves, I suppose, but the fact that, see, I don't like to call it a failed move because this really wasn't that big of a level of support, and it did support where it was supposed to. But as far as getting a bullish part of it, okay, how do we react from one of those moves? Okay, do we resist this area? We come up to the 18 here and we resist it, or we and close it there. And then when you see this, it's like, oh, interesting. This isn't normal here when you just look at it from this point of view. And this should be giving you like alerts kind of deal, like, okay. And this is where the tricky part is. Do I buy now? Do I try to buy in cheaper? You can see in the cheaper that you, oh my God, this is where I was saying to buy. I remember putting that in there now. Oh my goodness. And I was right. I was right, of course. I was just like, and I was going to do a video on it. And like, then I forgot all about it. And I was right. And then, I mean, I was like, yeah, you got to buy it. And anyway, so as it was moving on, it went up to this high, key Fibonacci level. And now for it, and this is where it gets interesting because I'm gonna remove this and do even new Fibonacci. I didn't plan on doing this. We got a high of 17.56 and this is this, and we got a low of we'll go 17.46 A 10-cent move. Wow, I can't. This is like so short term. This is where linear and logarithmic Fibonacci will be the exact same every time. 51 and 53. Oh my goodness. Okay, let's do decimals. So 17, higher end of 17 and a half, and the lower end of 1753. So 50.07, somewhere around, a little above that, right around here. Which you see in here, and this was a big indication right in here. We're not really resisting this fib level. That's not normal again. And it really, I mean, whatever on the resisting, I mean, it supported whatever. I'm sure if I had better charts, it might have hit it exact or whatever. And then as it was leaving this and breaking, those were signals that things aren't normal. Now the next Fibonacci level, because it's 53, I think it was. Let me just 1753.1. And we resist that next key level. That's normal. Comes back to this level. Not a surprise. Very normal. Now, how does it react with the 18 after? Well, within the 18 in here, we can see the bullish signs are right around here. And look what's been going on since. And what have we been doing at the 76.4? Because that's the next breakout level, breaking 1753. I can't believe I'm doing short-term analysis like this today. Never plan on it. And that's not uncommon for me to do things like that. So basically 1754 and a half. Um, it resisted it a little bit, but right around here. Come on. That's just like, okay, so now we are at a key previous high. This is a situation I don't like in that spot because you're usually well extended from the 18 average, and we are. If we have a resistance of any sort, well, it's probably going to be weak, as in maybe just come down to as low as maybe that 76.4, the 17.53 handle. Maybe it just goes through side, but this thing could just explode at this stage when you look at it. Now let me just take a look at what the longer term time frame, which is like the 15. Oh my god, that failed move down below, yeah. This could be an interesting situation here because amongst the 15 in here, let me remove that line because it gets in the way. See, to me, I see a lot of these technical traders, and I mean, what works for them, but what works for them doesn't work for me. As they have all these different lines in like 20 different, they have like a 5-day, 10-day, 20-day, 50-day, 100-day moving average. They have this RSI here, they have this other thing here, and then they have these prices. I mean, this font to me, this is their fonts are so small I can't even read the price, and only price pays. So to me, price is the most important indicator. And oh my goodness, this is a beautiful setup. I mean, this thing should just go off right now. Is what I'm thinking as I'm looking at this now. Hey, but we'll see. We'll see. I'm not going to focus too much on the long term because if you've been watching my channel, you probably already know that stuff. And I will, and of course, you can just watch that if you want. Go scroll my older videos. But what does this move mean here in the monthly? If it goes up a bit, it just means a little bit of an extension here, nothing too big. What does it mean on the daily chart? As I mean, I started off here. Well, it makes some move up to the 18 average of highs. That's a huge one there. That's enough to flatten out this band. But it's really got to get above the low 18s, like 1820. And oh my goodness, this one. There's two levels, 1820, then above this level of resistance, and then above every other one. But at any of those times, that's like, okay, this thing could just have a good, concisive move one way or another. And it does look to me as if the buyers are gaining control of this market. It's been a very long period of time over the last uh, decade plus or so. Within, of course, the sideways consolidation. This is the monthly chart. Let's now take a look at gold because that was the plan and see what it's got to be having that wild type of action. It's up 0.25%. What's the ratio at? Pretty much break even. So both of them are gaining about the same. And it's just hanging in there. It's congesting, resisting amongst this level, but it's not doing so through price. It's doing so through time because it's. I mean, all it's done is come down to 1468 when the last key fib was 1321. If I take the differential of like, well, 65 points from 15, that's 35, and this high is like 53, so that's like under 100 points. It's reduced. And 150 is 10%. So it's like 5% is all it's been able to go down from its highs. And this is over the time frame amongst this daily chart where it's been just going above and below this key level and just getting above it, man. That's a super duper strong type of situation. And I mean, I got something to key. I mean, this isn't much of a failed possible breakdown here, but it kind of did break down below a key level of support and is rebounding it really quickly. Either way, if you call it failed, like I stated in one of those markets or earlier in this video, whether you call it failed move or not, the bottom line is after the sell-off to be able to recover on that situation really fast and then to be able to hold your recovery, which is that stage we're seeing now. Staying price action in this area is doing just that. And yeah, that's looking pretty good. So let me just take a look at the 1 minute on here just for something fun. Did it have wild moves at 8:30? Again, I do that, putting a line in the middle for no reason. Yeah, I mean it was. I mean this is a spot here where I'm like, okay, I want to shorten out the time frame. What happened in here? I can't because I don't have like a 10-second time frame. I do have a good premium package, but you need like the top end package to get that on here, which is like whatever. There's a few things that they should be giving me that I'm paying for that I should get, but whatever. The stuff that I'm getting, I do really I do use a lot of it. A lot of it, of course, being stuff where I can just do like gold. I can also well, anyway. This is the 1 minute like the gold to silver ratio. I can just go gold divided by silver, but this is going to look weird on the 1 minute though. It's not going to work on the one. I think I need maybe the four doesn't work either. I guess whatever. Does the four work? No. The dysfunctional candles, and now they become more functional here on the 8 hour. I've put lines in here before, but I can do things like divide and multiply things. So if I want, I could be like, I don't want this ratio to be 85.91. I want it to be what the ratio is for, say, like a kilo. It's like 32.1 or 32.2. Actually, that would be whatever. I can just do whatever type of stuff. Because one of the things I was doing earlier, let me just show a spreadsheet on it because it's got gold in it, so I guess it would work. And this was I was going to do a video on this and I decided not to, but uh, then is June the 30th, 2015. And what I'm looking at is what the price was then and what the price is today of these coins against Bitcoin. Where cryptocurrencies, gold coin has been delisted, but Einsteinium's up 10 times its value since then. Groestel coin is up 7. Monero's up about 3.5. DGB up 2.5 as his exclusive coin. But even a lot of these ones, I was going to state. I mean, they've been. It's just a timing issue and a huge rally that it managed to at least hold. I guess you could say. But a lot of them are down. Like exclusive coin, up 2.4 times. It was 375. Now it's at 900. But it used to be at like 50 trillion. Sarcastically speaking. What I probably should have had is what the all-time high is or the post-high. But then you look at some of these other ones that are down 65 times. Purecoin, Feathercoin was down 37 times. Veracoin's down 28 times, and they were even down more from their key highs or the all-time highs. This is just and June 30th of 2015 was a time where a lot of the altcoins were going, were topping, and I could have done like June 15th, and it would have been like more worse for it. But that's where it looks like there was the tops would have been for a lot of altcoins. But then gold is down 24 times against Bitcoin since then. The Dow is down 21 times. Apple stock's down 16 times. US dollar's down 31 times. Which you can see here, gold's down, not doing as it's overperforming the dollar, as is the stock market, as is Apple stocks, as is not Deutsche Bank, which is down 127 times against Bitcoin since June 30th, 2015. But what we could do is I could just take a stock and say, well, how's Apple doing against gold? Okay, well, let's go AAPL divided by GOLD. Well, the price is 15, and when it's like this, I'm like, I want to read it better. I'll multiply it by 100, and then I'll just get a nice little price target. And I can put up charts like this. So Apple's been overperforming gold very well so far. How about stuff like, say, just a GE stock? And I'll probably have to do this again. GE has not done as well. You can see the price action has went down from like several fold times lower. It had this level of support, and well, you had to think that a lot of people, the time to sell GE stocks for gold. I mean, if you can see just in here, 18 average to do its thing. And this is why I just use the 18. It does everything I need for me. It does very, very well. Where did it say from the last little while that this breakdown was going to happen? Well, above here on the 18, which to me, you sell above the 18. So hopefully if you were taking profits, whatever. I'm just saying as far as chart analysis. Here was a warning signal. Here's a warning signal. Here's a warning signal. And now it got serious during the excitation of the 18. So in here, this is where it got really bad. So it was easy to note around here like 20, okay, this could be serious. And well, obviously it was more serious than one might have imagined, but that was like the point to say, hey, and then this is where you could say everything's, something's way oversold or way overbought. Okay, was it oversold here? When it was way down so much, you thought, oh my goodness, it's down to 13, it's back to where it came from. Okay, well, if you don't find support where you're going to, expect it to go to next key level. Next key level is previous low. Okay, so we can see we support in here. And once you break that, next key level, okay, resist. Resist where you came from. I mean, a lot of people are looking at this chart. Well, that's everyone watching this video and me. That's it. But and then we can resist it. I can't say that because there might be a couple people. I mean, gold is a big market, and stock market's a big market too. But with that being said, what do we see here now? I mean, this is not, I mean, looks like gold's going to continue to overperform GE moving forward. Oh, this run is not over. We've had our correctionary phase, excitation of the 18. I think gold's going to overperform GE over the next upcoming few months. And one of the fun ones is the national debt and stuff like that. So what's the called here? Debt. Let's go to economy. So I can just take some of the stuff in here. And these charts are free for everybody. Which one do I want to use? I mean, M1 stock is always easy enough. So I could just go like that. Oh, M1. Okay, so now I can take gold divided by M1. And now we got like more of like what would be like an inflationary adjusted-ish kind of chart now. And I can see on the gold part here, you got key low, key high, and now we've just been changing it around. So gold did very well from 2001 to here, basically gaining 4 times its value, inflation adjusted. And then inflation adjusted again, we see it goes from like 0.9 down to 0.3. So it lost about 3 times its value, or 67%, or 2x. I think 3x, yeah. And did gold actually lose 3 times when it went from like 1900 down to over 1,000? Considering that would be a 50% decline or a 33%. It's not much. It's not even losing half your value. Close though. It was almost half your value, but not quite. But this one was more because, of course, the situation in here. And for patterns on this one, well, let me just remove this and finish this off by look at the 18 and see how it played out in here. I mean, I don't got all the data beforehand, but I do have enough to know that this was in a bear market here. It had an attempt here. It failed. The correctionary move succeeded to this one attempt, which failed. Its correctionary attempt for a while succeeded, but kind of failed in here. Another failed attempt in here. So now this one, which was a successful attempt, of course you don't know that at the time. As we look at the stages, and I've talked about the stages of trend. So band flattening out right here. Establish resistance, come back to the band, break resistance right there. And you would have done so with the 28 handle. And from that point moving forward, yeah, exactly. And it never ever gave in on the 18 average of lows until when? 2008, which was a failed breakdown, as we can see in here. Failed move, it goes down below this 18 average of lows, but then recovers in it. But there we have re-excitation again. We can see first at around the 64. This is when it's just leaving the 18, and then when it just breaks resistance at 78. And in here, you can think of, okay, well, this is a failed breakout to a degree. Yeah, it was. It was a big one. It was a monstrous one. But did the 18 give you any indication on it? Well, in this, you come down in here, and what do you do after it? You come up close to the highs, come down, and then this is a pause period here from this one. That's generally weak, and in this case, it obviously continued to doing so. And then you fulfilled this with like a long sideways reaction in here, which was correcting within the 18, a newly declining 18. But it was doing so within an uptrend here. So the cautionary signs started to come in as it was breaking in here. And the excitation of the 18 was really this candle here. And if you wanted even further more upon it, you had the pause candle, and then after that, the break of the 63 handle, of course. You can see, well, look what happened afterwards. And then now as far as reversal of trends is concerned, again, you have this move. Okay, didn't do it. And now we're doing it again. It's another attempt. So here's band flattening out, establishing resistance. You know what? I kind of would count it as coming back to the band if it breaks above it. I know if y'all wanted to be a pure analyst, I'd like to see maybe a little bit of a decline or a little bit of time to have this 18 come up with it. But the whole point of it is the step one is to stop the decline. Step two is to establish and announce that you're attempting to revert the trend. Step three is to, after you use the energy to do it, to successfully correct the move that you made, which is higher or low your rally. And then stage four is which is propel from that point forward. So it's now looking, really getting it above here type thing would be like a stage four. Thank you for tuning in. Have yourself a great day. Bye-bye.